First of all, I think I'd like to say welcome to the 2021 annual members meeting of the West Yorkshire Pension Fund, which again this year is an online event only. The aim of the meeting today is to inform you and members of the fund about the performance and activities of the fund for the year to the 31st of March 2021. And I think it's fair to say that, again, all aspects of fund operations continue to be impacted by COVID-19 throughout the year, with staff having to work from home, remotely, and also volatile investment markets. The fall in investment values that we experienced in the last weeks of the previous financial year was actually followed this time around by a strong bounce in the quarter to June of 2020, after which markets progressed with some volatility in line with the pandemic news flow. At the year end, however, the value of the fund was £16.3 billion, a rise of 23%, leaving the West Yorkshire Pension Fund very well funded. Throughout the year, the strategic asset allocation was reviewed, which is going to result in some changes to the portfolio over the next few years, all of which are designed to improve diversification within the portfolio. This will also be done in context of our environmental, social and governance policies, which have also been considered in detail and continue to be considered in detail and further developed by the investment advisory panel during the year. The presentations following will provide some more detail on the financial performance of the fund, so I'm not going to do that at this point. I will go on to say that the administration of the fund also has been, again, the highest quality in the year under consideration. There are almost 300,000 fund members and 423 employers in the fund. The administration has again met or exceeded performance in all of its targets and remains the lowest cost overall of any of the funds in the local government pension scheme. It's also award nominated. In the year under consideration, the fund has taken on administration of the London Borough of Barnet Pension Fund and a further 3 Fire and Rescue Authority pension funds. All told, that's now 23 funds for which West Yorkshire provides administration, and that's something like 850 clients and 464,000 members. So I'd like to thank the administration and investment staff of the fund for their continued hard work and excellent performance in what has been another challenging year. Also the advisors of the fund, members of the investment advisory panel, joint advisory group and the local pension board for all of their contributions. So thank you. I would have gone on to the first presentation, but unfortunately due to the technical difficulties I had, we're now on to the next one, which is actually Rodney Barton, the director of the pension fund, who's going to take you through some of that performance. So over to you, Rodney.
Right. Good afternoon. Thank you. I'll highlight some of the key items from the annual report, as well as look at some of the significant changes to the fund over the longer term. On the McLeod discrimination case, the government is continuing to engage with employers and member representatives to seek solutions for the LGPS. We're hoping that we're close to the end of this consultation exercise now, with the government coming up with some draft regulations, but it's going to be a major exercise for West Yorkshire Pension Fund, reviewing thousands of cases to ensure that all beneficiaries are in fact being treated fairly. West Yorkshire Pension Fund has always been one of the best funded schemes within the LGPS. And it's now one of the few that is fully funded, with the assets at the last valuation in March of 2019 of 106% of the liabilities. I'll cover this aspect of the fund in a little more detail later on in my presentation. West Yorkshire Pension Fund is part of the NLGPS, which is the first and so far the only investment pool to make significant investments in infrastructure, and has created a company to allow other pools to partner with it. Our shared administration service, which includes Lincolnshire, the London boroughs of Hounslow and Barnet, and 19 fire and rescue authorities at March this year, as the Chair said, continues to work well, and we expect continuing growth and resulting efficiencies as a result. The total value of the fund at £16.3 billion at the year end has recovered strongly after the financial impact of COVID-19, which we suffered just before the previous financial year end. While this has grown rapidly as a result of much stronger financial markets than we were expecting at the beginning of this period. We had 423 employers within the fund at the end of March, and the membership was just short of 300,000 at 298,307. I'll come back to membership numbers. This graph shows the steady increase in the value of the fund over time, and the fall last year due to COVID-19 and its impact on investment markets in March. However, the value has recovered to a new high. If markets continue in this vein, it'll stand us in good stead for the actuarial valuation next March. The Northern LGPS is now well established and delivering benefits for West Yorkshire Pension Fund. We're in partnership with two other large, efficient metropolitan funds, the Greater Manchester and Merseyside pension funds. And we're working on reducing the cost base in our infrastructure and private equity investments, where we believe that there are further efficiencies to be gained. The latest independent reports show that NLGPS has the lowest cost of the local government pools, and that its long-term performance is above its benchmark. The total pooled assets now exceed £47 billion, and Cllr, the infrastructure vehicle, has £1.8 billion committed to it and has already invested £1.2 billion in UK infrastructure. We've also set up NPEP, which is a joint private equity vehicle where once again we can reduce our average cost of investment in this asset class, and that now has £650 million committed to it. The Shadow Committee met every 6 weeks, and at the beginning of the period that we're looking at, in fact, became the committee after the agreement was signed and formally ratified by the three councils. And that committee has approved the appointment of a common custodian for NLGPS, Cllr and NPEP. And a further development in the last few months is that we've been working together on property investment. Coming back to West Yorkshire Pension Fund again, this is a summary of the fund account for the 5 years. But looking at the most recent year, the net position after contributions, benefits and costs is that the fund was down by £76 million, less than last year. And after investment income of £355 million, which again was down by £100 million, reflecting companies cutting dividends in the light of COVID uncertainty, that leaves us in a net position for the fund of an increase of £279 million in the assets. reflecting the normal growth trend that was disrupted by the large transfer of assets and liabilities relating to First Bus in 2018. This means that we are cash positive, a position that we anticipate should continue for the medium term. If we look at the contributions receivable, you can see that they're up by about £30 million, principally due to employers' contributions rising, up from 442 million to 472 million for the latest year. The pensions and lump sums paid out in the year hardly changed, down less than £3 million together, but the continuing pensions rose from £424 million to £440 million. The change in the benefits payable since 2018, when the total paid out was almost £1 billion, is the fall in what is described as other, which reflects the payment to Greater Manchester Pension Fund in that year. This was in respect of the First Bus liabilities, which were greater than the payment which were transferred to Greater Manchester Pension Fund, leaving West Yorkshire Pension Fund better off on a net basis. This transfer was a commercial decision by First Bus to consolidate its pension liabilities from West Yorkshire and South Yorkshire into the Greater Manchester Pension Fund. Based on the September CPI figures, we expect pensions in payment to be increased by just 3.1% from next April, but this has not yet been confirmed. And similarly, accrued benefits under the care scheme will be increased by CPI. The pension administration costs were down by £700,000. This is principally due to delays in staff recruitment due to COVID, but previous investment in IT systems and improved service resilience ensured that we were able to maintain the service while staff were working from home. Investment cost fell too, as there was less activity in the portfolio as we concentrated on conserving cash during the uncertainty. This slide summarises the membership. Scheduled employers are those whose employees are in the scheme as of right. The admissions are those where they have some discretion over membership and could choose to leave the scheme. And during the year, 33 did in fact leave. The total number was 409 at the end of the year. The number of active members now exceeds 100,000. And during the year, we had 20,578 joiners, 3,151 retirements, and 5,719 who left for other reasons. As part of the day-to-day management, we have a series of key performance indicators to enable us to ensure administration remains on track. This is just a small selection. Much more detail is given in the annual report itself, which I commend to you. West Yorkshire Pension Fund endeavours to deliver a top-class service, but at a very low cost. As you can see, the team exceeded the targets, which in the year in question particularly demonstrates the commitment of all our staff. That service is being delivered against a background of increasing efficiency. This slide shows the principal employers in 2009, just 3. By the end of the financial year we're looking at, we administered 19 fire authorities, Lincolnshire Pension Fund, and the London boroughs of Hounslow and Barnet as well as our own administration. The investments have risen considerably over time, from 5.9 billion in 2009 to 16.3 billion at the end of the current financial year. This is up over 175%. And these assets relate purely to West Yorkshire Pension Fund. On the administration, which relates to all those employers on the previous slide, in 2009 we had 190 employers in total and a membership of 218,185. By 2021, we have 850 shared service employers, an increase of 347%, and 464,000 individual members, again up over 110%, while we still managed to achieve the key performance targets. This is due to investment in systems, but principally due to skilled and dedicated staff. Our shared service offer has increased fairly steadily since 2014, and we hope that it will continue to do so. And this is an opportune moment to just reflect a little on our costs. The Department for Levelling Up, Housing and Communities collects statistics from all 89 LGPS funds on the basis of the cost per scheme member. On investment management, we are the lowest cost by a very long way at £22.83 per member against the average LGPS of £209.70 per member. The highest are well over £500 per scheme member. On the administration front, we are 7th in the league table at £16.23 per member, a top 10% performance. And this low cost is combined with a service quality which is well above average. And this is why we are building up the joint service arrangements whilst reducing the average cost for all participants. Looking at the total cost per member, we're also the lowest at £41.94 against the average of £245 per member. The low cost of investment does not come at the expense of performance, as can be seen from this chart, where the benchmark is being beaten by the team consistently over all periods. You'll hear more about this in a subsequent presentation, but this consistent outperformance feeds into the actuarial valuation and therefore ultimately into employer contributions. In 2016, when many funds faced very bad news as investment markets had been harsh, West Yorkshire Pension Fund still finished with a funding level of 94%, among the best amongst the scheme. With the consistent returns above the benchmark, the 2019 valuation shows the fund fully funded with conservative expectations for future returns. The updates shown on the slide for 2020 and 2021 are estimates of the funding position rather than proper full valuation exercises. So what happens in the financial markets over the next few months is key to where the funding level will be at the next full actuarial valuation in March of 2022. So then in summary, West Yorkshire Pension Fund is a pension fund, something which is here for the long term. So we always take a long-term view in what we're doing. West Yorkshire Pension Fund is financially very sound. It has a positive cash flow of £348 million in the year in question. In terms of quality, we've been shortlisted for 3 awards again this year. And then the final point I would make is that all pensions and benefit payments are set by regulation and are not in any way affected by the movements in stock markets or investment returns or future changes to the local government pension scheme. What is already set and agreed as a benefit is there. Thank you very much.